The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday through Friday, 12 noon to 1 p.m. I should know that after, 15 years. And we're also looking at the dollar. I just wanted to finish. I was doing the update a moment ago. I just wanted to finish that thought because I love to look at cup formations and arch formations. Look at these cup formations in the dollar daily. Look at the cup formations in the weekly. Look at this huge cup formation in the monthly, and now there's a second one, almost like a rising handle, almost like a ChapmanWave cup and ladle pattern, in leg D with 3 sessions, 2.5 sessions to go. In the monthly, the technicals are very good. The technicals in the weekly chart are mostly good. Price is good. The stochastic's only at 75%. I like to see it at 80% or higher, so it's got a bit of a way to go. The daily chart has a very nice recovery. I spoke about this yesterday. I said, oh, nice that it's about to cross positive in the MACD. There weren't any signals in the moving averages that I follow to say that we should be shorting and we've only taken a tiny little bit off since the buy signal back on April the 6th of 2018. Via the UUP, and I just don't see a reason yet. I still think the United States is the best economy, and this really represents that. All right, enough with that. Let's just get to back to the looking at the indices. INDU, the Dow is right now trading at down 96. It was down quite a bit more earlier on. Actually, it was down overnight about 100 and something points in the Dow futures. Came back very nicely, went very strong positive, and then gave it all back. To date, opened at 27,004, ran to 27,015, and then it slumped to 26,803. So it's about 70 points above that. This is I'm going to be doing this in a moment. I'm going to go to the S&P, the futures, the continuous contract, because that has the monthly chart the way I like it, and it's actually trading at the same price as the futures, within, just within a quarter point or something like that. So let's just do this. There are patterns that I always look at. One is where you get the cup formation. You can get a left side, right side price time match. In this case, it missed that. The peak D that was made, ChapmanWave, we're always looking for 4 higher peaks, alphabetize them, uppercase on the way up, lowercase on the way down. At that 4th highest peak, peak A is 1, peak B is 2, peak C is 3, and then you're 1 penny above C, and you start leg D. When that leg D stalls, becomes a peak because there's a lower high bar following it. D is where other things can happen. Yes, look here, on the weekly it went to an E. Look here, in the monthly it went to an F. That's not the point. The point is that within the context of what we're really looking at in terms of chart formations, left side, right side price time match, where you can go, what happens at the 4th highest peak? Yeah, we got a cup formation. It didn't get to the 27,398 level. It went to 27,306. Yes, 92 points can make a difference. 94 points can make a difference, because that would have made a new recovery high. Would have got that leg D in the monthly chart that we've been talking about. However, within this context, if you look at the high that was made back at the little doji candle high of the 16th of July on the Dow, 27,398, it took you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That 11th session is the one that smashed with the 2 moving averages that I follow closely, reversed and went negative. The MACD had already given the signals, but you see, I treat this as a confirming indicator. The technicals of the actual turn, like that turn we got on the 16th, 7 points from the all-time high, went short. That uses completely different techniques. But here we are. We're in the 1, 2, 3. 4, 5, 6, 7, 8, 9, 10. Let's do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9. The 10th session. So is this going to be another one of those 11 sessions where all of a sudden tomorrow it's just, and this is the end of the month where you'd get buying from these institutions. So something's going on here. Some people are very nervous. And what I am looking at is that we haven't yet got that negative turn. It's still going to take at least another 150 to 200 points down before you can get there. And of course, there's a look back period and all sorts of things that take place. So it's saying that there is still residual strength. That's the reason why every little blink and eyelash and whatever it is can get the market popping to the upside without breaking down. Okay, what's really important is that weekly chart is still holding very nicely. The technicals are not that great, but the price is held. So I'll give you parameters right now. A close above 27,220, actually even 27,190 would be really positive shorter term and say, hey, you can go a little higher. And any reversal, and we've had so many downside swoons, I don't know how much is left now without having at least another rally attempt. But if you go down, if you go under today's low of 26,803, let's call it 26,770. You'll retest that 26,755 low of 3 days ago and probably break it. Just make it real simple. Now let's go to the S&P. I don't want to talk about the monthly charts. We'll do that we'll do that on Friday, tomorrow. I will not be here on Monday. So 29.71 down 13. We've got leg C unfolding, leg C, trough C if there's no new low today. And here again, the MACD's negative, stochastic is way down 45%. This should be going much lower. It's been held up because those two key moving averages are really giving support. And the QQQ, and look at this, I've got a peak A already in the S&P. Yes, it could be an F/A. I don't see any reason right now to even think of that. You've got a lot of room to go down. You can go down to the 2700s, still have A if you're going to make all new highs in 2019. All right, so here we go. QQQ, this is a peak B in the monthly. No other way I could count it. So that's still very positive. But shorter term, it's really struggling. And I think those FANG stocks are part of it. And I would not be surprised if in the next week or so, we're really testing the 184 to 182 level. And then maybe we'll have to get ready for a break to the upside. All right, IWM, just real quickly, I don't want to go through these again. Acting very weak. It's under the 200-period moving average of 153.06 to 152.50. It's just showing no strength yet. Gold, I want to do gold because gold's very important here as a harbinger of safety. It's just hanging out today. It had a sharp move down after a very nice rally, but within this containment area, you remember I drew this in, 1546 was the high way back in August, and the low, that was also 1488, and we've been stuck in that range, and let's see if it gets out of this range. Silver right now, so gold is trading up almost 3, and silver is trading down 0.11. Same pattern, but it's a little weaker. It's stuck in a range as well at 17.99. Just want to show you crude oil because I want to spend a little time on the TLT, and then I want to go to crude oil is down again, stuck in that range. Remember, rectangle range can last a lot longer than your patience. Dow's down at 99, S&P's down 13. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, the TLT, that is the Lehman 20-year Treasury bond ETF, is trading at 142.65, up $1.18. And a beautiful single leg A up after a sharp pullback. A big rally comes to a stop at 148.90 on the 28th of August, comes down to a trough C. The MACD is trying to turn positive. It's just barely positive right now. Stochastics come from the single digits in such a short period of time to 59, let's call it 60% right now. That's good action. So I still believe in the pattern that I'm looking at here with the technicals, etc., that I thought I drew it in, I'll draw it in now, that I'm looking at the chance of some kind of a rally and then a stalling. Doesn't have to go back to the most recent low of the 136 area, but at least some stalling for a moment as the Dow, there we go, as the general market is also trying to take in a whole bunch of information here. Yeah, you've got, this is, I think, the first president that's going to have 4 years of discussion of impeachment from probably the hour after he won the election, let alone getting into office, but won the election to today, till this very minute. It's not going to stop. That's a modus operandi, I guess, in Washington. So it'll just keep persisting. So this market acting with the Dow only down 85 points and the S&P down 12 means that there's some strength in at least one of the sectors, in this case the Dow. And this is the kind of rotational correction I've been talking about. I don't see this right at the moment as one of those huge December-type sell-offs. I just don't see a reason for it right now. It can change, but I'm just saying right now I don't see it. And therefore, bonds, I think bonds are just out of the picture in a way, just for the moment. And if the market does pull back further, bonds could rally. Oh, maybe from 142, maybe they get to the 146s. They could even retest the 148s. But I don't think this is the big move for bonds to start screaming into the 150s. I think it could be coming later, but I don't think it's right now. and therefore it's a hiatus period for rates. So with that said, I wanted to show you something. I showed this to subscribers this morning. I actually showed it in the den as well, but I'll do it here. On the left side, the continuous contract, I don't like to put numbers on it because it's a continuous contract. It gets smoothed out, and therefore the numbers are wrong. So the high that everything about it is 100% correct, except the prices change. They get smoothed out. So 3,031.25 was the high on the 26th of July. And it comes down, and it took a little less time than the Dow. It only took 1, 2, 3. Really, by the fourth session, it closed for the second time decisively under the both the green and the black moving averages of 9 and 14. And then it got a sort of a sell signal and ran all the way down to the, so it goes from the high of the 20, what did I say, 6 or 7, 26, to the low of the 6th of August. That low at 2777.50 had a rally, a big rally to a peak A and then a B. And then it made an arch formation, pulls back, holds very nicely just under the 200-period moving average, not even close to the low that was made back on August the 8th. And then it bounces again and goes to peak A and a B, and then it comes back down. Now you've got you've got a double buy signal that hasn't really given you any follow through to a peak B minus and then a peak B that's sort of failing. And then out of the blue, it goes to a leg C, pulls back, and then spirals higher to a D, pulls back 1 bar, and then goes to an E. And that E, the top at the 16th of September at 3,005.25, below, not way below, but below the previous high of peak G in this case, has taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 sessions, and still it is only now for the second time underneath the black 14-period moving average, and the green is getting closer and closer to confirming. So now let me do this. I want to do a detailed analysis. I want you to show you. So if I put it in the chart of mine that shows you only the 9 and the 14-period moving averages, remember what happened over here? Look, it had a top, and then it went 1, 2, 3. 3, it was down sharply. 4, it was down sharply, but it was only the 5th one that gave you a crossover, negative crossover. Here we haven't even crossed negative yet. So either we're using up time, which means that you got a lot of support in the 2940s going into the first week of October, or it has another couple of sessions of really negative action, and slowly the green gets closer and closer to the black line. Or there's a third alternative. Because it's held so well, you could now have a rally, and that rally could give you a cup formation that says, take me to your lead of the 19th of September of 1,021.99. So 3 scenarios. Which one is the one to play out? This is what we don't know. As Larry Pesavento likes to say, nobody knows. But we can have an educated guess. And that educated guess says that the MACD has been deteriorating. Stochastic is very weak in the daily chart. And in the S&P, you could have one thing, but in the ES, let me do this again. Now I'm going to put in the continuous, oh, I knew I lost that. The continuous contract. And what does that do? That takes you, if I can find right now, I don't have a break coming up, so let me just chart analysis. I'm looking for the one that says S&P. Is there one right here that says S&P? No. Oh, there it is. E-money, E-money, E-money. Oh, there it is. Here we go. Okay, we're back. So now we want to look at the ES, the continuous contract, and you'll see that this one is dipping much deeper, but it hasn't even got close to crossing negative, but you've got 29.86 for the green 9-period moving average and 29.77, 9 points difference. That means you have to you have to go down pretty sharply. You have to probably take out this low of the 25th of 29.53.75 to really get a big crossover. And then it's the next day that gets followed through. So that's the way I'm looking at it. And these M-shaped these arch formations can become M-shaped patterns. So if there's anything that changes the mood of the market right now, which I still define as being negative in the shorter term, and changes that, it would have to probably close above this candle, the high of the 24th, this is the E-mini, of 3,012.25. And what I said to subscribers is probably above 3,017 in the cash index. Yeah, there's a good chance we're going to try to retest the all-time high. Let's get out of this now. I want to show you something else. So that's the scenario. Now, there's another way of looking at it and say, hey, you had a little wing on the left side, then you had this big bulge cup, and now a little wing with it like a cup and handle, but with a little handle on the left side. Looks like a gravy bowl with a little left side handle and a right side handle so that you don't spill the gravy. Well, that's a positive right now because it hasn't broken down. We'll do the weekly and the monthly when we get back. This is a key moment going into the close of September, Monday, in the bar of the monthly. I'll be back.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, just to show you the 2-minute E-mini, down 10 right now. It made a little peak D. Well, first of all, it made a big peak D right here at the top today. That was at 29.95, round number high. Then it pulls back, and then it had a little bounce at about 10.15, goes to peak A, B, C, D. We're always looking for those Ds, down arrow, because everything turned negative. And then it gives you another little signal, which was a peak A and a peak B. Then it fails, but it doesn't take out the left side low. Instead, it creates a little mini AB. I call that a gray A and a gray B. I didn't have time to change it. I'll change it now. And why? Because it's a very strong signal is when you have a low that is not taken out, and you have a couple of tries to take it out, and you build like a peak A and a B, and then you pull back, and then you have another one, and then it fails, or just a single A and it comes back. And finally, when it takes it out, in this case, it went to a C, D, and E, and now it's at an F and holding very nicely. So, and that could be an instant restart, 2-minute chart. But I'm just for now saying it's probably an F, and then it has to just go a tad higher, and then that 29.79.50 area at the 200-period moving average becomes a magnet. Right now, I think it's a repellent. Just for the moment, to take a bit of a breather, we'll see what happens. But that AB this is what I call a Chapman wave overlapping wave. Why? Because you had A, peak B, pull back, don't take out the left side low, make another little peak A under the previous B, make another peak B is also underneath the previous B, and then it says you should have an overlapping wave, should take you to at least a peak D. Very often it goes to an E and sometimes an F, and then it might need a little digestive phase. So, okay, enough with that. Let's go back to this. So, very nice action. Now the Dow's down only 64, S&P's a little deeper, it's down 9.5. Why do I say good? Because this now all of a sudden the 9-period moving average and the 14-period moving average are close to converging, and they're acting as a magnet rather than a repellent line. The day is young. We'll see what happens here, because this is exactly within a day or two of it rolling over and then seeing the price just cascade lower. And basically, we've only got a sideways digestive phase, less than 2%, I think, that we've seen. That's quite amazing. Okay, now I realize that my TFNN emails are not coming, Basil Chapman at TFNN. I think I've got a little problem here. I haven't been able to transfer the computer that has that particular program that I use. I like it. I don't really put it onto. I'm going to try not to put it onto this new computer, just because there's something that I do in that I haven't yet been able to configure for this one. So if you have an email and you'd like to get it to me, maybe I hope they don't mind. If you can just go to TFNN at, I don't know who to go to. Or just, email TFNN, and then they'll pass it on to me. So, okay, let's move on. We've got, I said I want to look at the weekly chart. Now look at the weekly chart. It's got a Chapman wave inside track repellent zone. It went from a peak G, just like the daily had a G. This was a peak G in the weekly right there. That was in October, made a high, a little double top high, plummets to December low, went under the 200-period moving average in the weekly, then above it, and it went to peak A, B, C. We had a D, and we had an E with a very sharp sell-off from 3,031. I should give you a date because the price could change when it gets smoothed out. So on the 26th of July, week of the 26th of July, 3,031.25, and it pulls back in 3 weeks. It gets down to, has a Chapman wave 2-bar reversal down, and it goes to 277.50. I think for now I'm going to put it in, even though it's a continuous contract, 277.50. Okay, so, and now it's run back, but it hasn't run back to the high yet. And I say yet because you don't know. So this is a very important, because you see, look at this little channel, I call the Chapman wave inside track repellent zone. It can go higher because that repellent zone is rising. But if it gets even close to 30.31, then I have to start looking in and saying, hey, is this now breakout material? Are we going to scream through that high on the left side and make new all-time highs? That's going to be a big thing. Right now, it hasn't even got there. It's still showing some weakness, and the MACD is just barely positive, and stochastic is good at 83%. If it flattens out, That's going to be good action. Now here comes the monthly chart. See, the MACD hasn't turned positive. It's still the 0% line is still minus 1.54. Stochastic's excellent at 89%, and that's really what has kept me saying that I think they're going to go to higher highs in 2019. But, and also I've got this as a peak A. It'll make a peak B if it goes, it's a continuous contract. 1 penny above 31.25 goes to 20.26. That's a breakout to a new leg B. And then it's in the repellent zone, but it's still a very important thing. So there's a rising triangle. I draw these all the time. I'm never impressed. Why? Because a rising triangle, you're going to get that if you have a very strong move after a very strong move down, you're going to get this triangle. What is important here is that the price is almost at the all-time highs, yet the MACD has yet to turn positive, and the stochastic is positive at 89%, and the moving averages are positive. Why isn't the price, could happen by the end of the day or tomorrow, why isn't the price up in the all-time highs? Why isn't it up in the 30, 33 area? And that's because there's overhead resistance. So if I talk about overhead resistance, I have to look at a whole composite of many different stocks. But it's just real easy right now. Let me just show you my Dow quartet. It's made up, it used to be GE, now it's Caterpillar. So Caterpillar, which is at a very nice rally. We were long from the, it made a low of 111.75, ran to 133.99. We were long from the 122 area and took profits on the way down. No, on the way up and then on the way down. So we're out of it and we're just looking. This is a deeper correction than you would normally get, especially from a cup formation coming off a bottom. You'd have just a mini handle and then a breakout to a new high. IBM has been very interesting because it's had a very nice move off the lows. The monthly doesn't look good at all. Well, it's improved, but it doesn't look good. And the weekly chart says, hey, I need a timeout, but I'm really struggling to get to the 200-period moving average of 147s, and I'm at 142s right now. So there's a little bit of a way to go. But this is very important because it's holding well, but it's not showing real strength. Now, it did up until 2 weeks ago, and now it isn't. Triple M, 3M company, international company, has that same peak C failure pattern that Caterpillar has. This is a multinational. Is it impacted by dollar? It's been impacted for ages by the dollar. No, if it was doing well, it would just scream to the upside. So at 163, I need to see 173 to say, now that's impressive. You break under 160 in the next week and a half. That's not good. UTX is the fourth one. And as I said, UTX is holding very nicely. In fact, today it's good. Up $1.22 to 138.05. We were in it. Got stopped out. Now it's showing a cup formation. Remember, this is what we're looking at in the Dow. It's taken from the signal. Here we are. Look. Yeah, look at that flag pattern. This is what I call ChapmanWave falling axe, making a cone formation, declining cone formation, making lower highs and much lower lows. And now it's starting to tackle the breakout line. This is a good sign. United Technologies moving like this, helping the Dow. I'll be right back. Dow's down 62. Basil Chapman, Tiger Conditions Hour. Be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So a couple of things here going on. Let's see. United Technologies is helping the Dow. It's up $1.27 at 138.09. I don't know, maybe they have something to do with whatever the activity or whatever the discussion of the moment is, because it's testing the breakout of the ChapmanWave falling axe formation, the declining cone, and 138.07. It could try to test the 134.40 level that was the most recent high. And if it breaks above that, that makes the weekly even more impressive. So 122, that'll be A. It won't be a B minus. That actually will be, this is C. Yeah, that'll go to a leg. Oh, there's that pattern that I spoke about recently. One of the reasons why we actually went long, although we're not long anymore, is because there's a pattern that I call the ChapmanWave Sears Holdings pattern, where it was a weekly chart was coming down sharply. It rounded and then failed, made a pattern that I call the dreaded H. And then it held very nicely. And the next thing I knew, it started to break to the upside. Well, that's my rule of thumb, except I'm a very visual person. Out of the blue, I suddenly said, oh, my goodness, a successful H pattern can turn into a U, a cup. And there it is. Look, a successful H pattern, lowercase h, sharp, move down. Here comes that arch. And now you've got to think cup formation, because you're starting to close above the high that was made right here. It's this B that kind of failed at 138.31, but it's still an active B because it never took out the left side low. So that means this is an active leg C right now, peak C, I should say. There's a good chance that we could even have a little a leg D, and that'll help the monthly chart. So this is what I'm saying, that is a bifurcated market. I just showed you how certain stocks, and just 4 of my key Dow stocks, were doing different things. Here's another thing. I was asked about, could I look at, go back and look at X. So USX trading at 11.22, down 23 cents, had this really move. Remember, we were talking about it. We had Scott down in Florida. He was in it, and he wanted to add another position, and he was saying, United States is not going to go out of business, at least it doesn't look like it right now. It's a core American business, and that he was prepared to hold. That's not the trading style that I had said. I said I would have had a stop. I probably would have been stopped out for either a break-in or a bit of a gain. But look what happened. Yesterday's candle was superb. It went right to the pink 9-period exponential moving average, only pulling back a little bit today. So I'm saying to you that even within sectors, you've got some strong and some weak stocks. The SLX is actually a much better chart than USX. So that's the steel sector index, Van Eck Vector's steel ETF. Also went to a peak, seeing its pullback. But it's looking a little bit better. It'll be even better if we can go from the 33.68 level right now to the 35.10 level in about a week, by Friday a week. That'll be very good. Okay, so I just wanted to do that to show you how diverse things are. I also wanted to show you that in the HGX, this is the Philadelphia Housing Sector Index, those low rates are really helping housing. Yes, you might get an earnings report or so once in a while that isn't good, but there's no reason why they should be impacted negatively by the low rates. This should be a positive, and it is. Let's see what Lennar is doing. Lennar trading, oh, look at that. Peak A, B, C, D, A, B, C, and it could get to a D at any moment. Hey, that's very good action. And what was it? Beazer Homes, BZH, BZH. Oh, right there. So I say that's an E/B. And then that would be a C, and there's your D. Very good. And it's an F in the weekly. C, and there's your D. Very good. Yeah, that's Beazer Homes. Good. Trading at 41.63, down 8 cents today. It's gone all the way since August, when it was in the 11s. It's up over 3.5 points. 3 points. That's really good. I like to see that. Okay. Crude oil. Crude oil, as I said, is in the, so someone asked about the USC. USC is the, so crude oil is down 45 cents at 56.04. Back in this intermediate term rectangle formation. USC, no, USC, USC, UCO, UCO. UCO is exactly the same thing. Oh, man, I just forgot for a moment what the inverted, is it USC? UCS. UCS. Oh, I don't want to waste time on this. I'll find it. They wanted to know about crude oil, and I said I'd have a look at the inverse, and I don't see it right now. Let me just type it in here. Find. There we go. Inverse ETF of crude oil. And they're going to give me the whole thing, and I won't be able to find it. SZO. SZO. Why is that typed in and not working? SZO. Oh, man. Do they not have an SZO anymore? All right, I can't find it. I want to just do it because I like to do it as if I was looking at the mirror image. And I like that. Bearish and oil inverse ETFs. Cute. Just give me letters here, mister. Oh, SCO. Oh, it's SCO. Didn't I type in SCO just a moment ago? SCO. Thank you, Lorna. Oh, my, look at that. $1.80. What does it say? It's, oh, SCOO. SCO? Whew. SCOO is about 50 cents or something. So this is AB, and it looks as if it's the inversion. Yep, it's called the ProShares Ultra Short Bloomberg. I don't know why I forgot that. I've even traded that before. So it's failed at a peak B before in the weekly, but all of a sudden the MACD is very close to turning up, and the stochastics at 44% and rising. So the question wasn't whether I should buy it. I just wanted to look at it because if you look at a mirror image, as I do sometimes, I invert so that you can get sometimes, you know, there are people that have a much better time, or they have much greater success shorting than going long. There's some people that can go long. They just don't like to short, but they're very good at the long side. And there's some people that just look at it, it doesn't matter if it's going up or down, they got a position. I like to look at it just to say, is there a pattern that I'm looking at here that is more identifiable because it's upside down? Look, this is probably a trough E in the weekly chart. If I do this, I've got myself a really nice inverted. That's that Y formation that I was talking about. You remember Y? Let me go right here. Oh, yeah, I can't get it. It's right. One of those days, huh? One of those days. All right, I'll find it. I wanted to show you something because I wanted to invert it, but I won't. This is like that dreaded H pattern that was unsuccessful by going below the left side low, but you've got 2 bars in which to go above the left side, and now it's done it. So I'll find it, and I'll do it in the break. I'll do it. Thank you for being here. I'm going to give you one more segment, and then I'll talk about what to expect by the close.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So if you're looking at the 2-minute chart real quickly from that low that was made at 1126, it went to a peak A, then a peak B, pulls back, goes to a gray peak A and a gray peak B because it held the left side low, but it didn't take out the left side high of that first peak B. Then it takes it out in a ChapmanWave overlapping wave that says you should go to at least a D. You could even go to an E and an F. Well, it went to an EF, and then it even went to a G. I said G/C just for the moment, but my thinking was that if it's probably going to be a G because you've got the MACD, fast-moving average, held all the way through through the peak D to E, F, and even G, and that's usually where you get your G as a top, and then it pulls back, and now you can see the moving averages have not yet crossed negative, but look at the MACD, crossed negative, stochastics negative. Now, within the next couple of bars, if you go to 29.72, you've got yourself at least a short to intermediate term top in the 2-minute chart. Remember, you've got to go one step at a time. All right, enough with that. Let's just go to this and say, this is what I'm anticipating. If so the crude oil is just stuck in a range. That's really what I want to say, between 56 and 54 right now. So Dow, if the Dow is holding to a minus 60s, I think I said to subscribers this morning, a minus 60s or more at, did I say minus 40s or minus 60s? Well, minus 60s. At 130, there's a real good chance you're going to get a weak close. If for whatever reason there's a rally that holds and you start to see a plus, it's going to be tough to do in these market conditions. But just imagine some news comes out and it goes to about a plus 30s. That says you're holding tight. But if there's that weak close, you've got to be careful, because now those two moving averages are getting closer and closer to turning down. So just be careful. The VIX index has been just hammered every day. It tries to rally and it gets beaten down. It has a one-day wonder, and then it comes back. This time, you've got a peak A, B. You've got a peak A right here, and the price is holding at the 16.56. Remember, in the 16s, got to be careful for a triple-digit down intraday move in the Dow. Going to the 18s or 19s, triple-digit closes to the downside. That's what you should anticipate. So this is very important. If the VIX suddenly is going under 16 later in the afternoon and says, hey, good rally coming, watch it closely. Have a great day. I'll be back tomorrow. Check out my opening for my daily newsletter, and stay tuned for Steve, Dave, and Tom. Wonderful.